Hey guys, Chart Stopper's back with another video. In this channel, we take a look at different stocks and map out their key support and resistance areas on their chart. It's important to know these areas before you buy any stock, and it's also important to know what kind of a trend a stock is in before you buy into it. Support and resistance is one of the most important things you should know about a stock before you either buy or sell. Also, if you're doing any day trading, swing trading, or options, you are definitely going to want to get familiar with support and resistance. And just to let you know, I'm not a financial expert. These videos are for educational purposes only, but I am here to point out key factors on the charts which do impact the price action of a stock. I also provided a link in the description for Webull. You could use it to start an account and get 2 free stocks, and I also provided a link for Robinhood. You could use that to start an account and get 1 free stock. And just to let you know, we will be doing 3 videos per week on 3 different stocks. So if you have a recommendation, leave a comment below and I'll try to get to it. Also, don't forget to subscribe to the channel and hit that notification button so you don't miss out on any new videos. And let's get into the market today. Today is May 4th, 2021. And as you can see, the S&P 500 is down 1.05%. The Dow Jones is down 0.25%. And the NASDAQ is the biggest loser so far today, getting crushed, absolutely crushed, down 2.36%. So we're seeing a huge sell-off in the market today. You could see right out of the gates today that the market just started selling off, and it hasn't really recovered, especially the NASDAQ. It just keeps getting worse. You're seeing the bottom right here, which was around noon. It's making a little bit of a recovery, but not much today. So this could be the start of a new correction. We already had a correction in the NASDAQ for the past couple months, and now we might be looking at a correction in the S&P and possibly the Dow that everyone has been talking about because of these inflation rates going higher and talk from the Fed. So let's get into the stock we are going to take a look at today. I am going to be doing Hyliion Holdings. I've done a video on them before. I will provide the link in the upper right hand corner. You can go back and check that out to see how I mapped my chart out. Hyliion manufactures hybrid and electric powertrains for trucks. It engages in the provision of hybrid technology to tractor trailers. They were founded by Thomas Healy in 2015. They have 91 employees. Their headquarters are in Cedar Park, Texas. And today they are trading at $9.17 on the day. They are down 66 cents today, which is the equivalent of 6.79%. And we're going to take a look at their chart to see if we can figure out any way to trade this going forward. So you could see here they had a 52-week high of $58.66, and they hit that high on September 2nd of 2020. So last year in September, we saw a big run up in the stock out of the gate when they were a SPAC, and there was a lot of FOMO behind this stock. A lot of people were jumping in on the way to the top here, and you could see that it did not pay off for the people who were buying up here, okay? So you saw the correction start to happen in this stock was actually about a month later, on September 30th, and the beginning of October. You saw this stock sell off completely after the big run up, and this is the danger of getting in on these SPACs when everyone's going crazy and buying these things because they think it's going to be the next big thing. That's the danger of jumping in here, because you don't know when that price is going to fall. And this is a good lesson to people who are just learning how to invest or who got in on this. A lot of people lost a lot of money on this stock because it went from $58.66 from a high to a low, which we hit right here on April 21st of this year, of $7.95. That is a huge, huge drop in price. And, it was not good for the people who bought at the top right here. So you could see here, once this thing started to fall, it started to fall hard, okay? It was like a falling knife. And if you were trying to catch this on the way down, it just wasn't good for anyone. And the reason it fell like this is because of the things that happened with Nikola, not even the things that happened in this company whatsoever. What happened with Nikola, they're another company that makes electric semi-trucks, And what happened with them is a lot of people were buying it up just like this because they thought it was the next big thing. And people found out that they didn't even have a truck that was able to run yet. They made a video, and apparently they rolled a truck down a hill, and they wanted to show that it was actually driving. But in the video, they were just rolling the truck down the hill and filming it. The truck couldn't even drive yet. And a short seller came out and exposed them. And, it caused their stock to crash. And it caused this stock, Hyliion, to crash also because of that. Because of the false video that they made. And, a lot of people lost money on that. So you could see here, I went over this in my other video, but I'll touch on it again. This is a head and shoulders pattern right here on the daily chart. If you don't know what a head and shoulders pattern is, you could look right here in the middle where the highs are. That would be your head right here, your shoulder, left shoulder right here, and your right shoulder right here. So what happens is a lot of people start buying in. They buy to a certain point, and then there's a sell-off, and then there's more buying, and people run this stock price up. And, they run it up to a high, and then something will happen usually and cause the stock to sell off dramatically, which happened here. So this is a perfect example. And once you get a little bit of a recovery, which you had right in here, it fell to a certain point. People thought that was the bottom. It recovered a little bit up to this point, and that made your other shoulder, and then all of a sudden the bottom fell out again, and it caused it to sell off all the way to the bottom right here, which everyone, even myself, thought would be around $10 to complete the head and shoulders pattern. But this thing ended up falling below $10, below $9, and it eventually bottomed out around $8 right here. So that is a textbook example of a head and shoulders pattern. You could see what it looks like. It looks exactly like a head and two shoulders, and the downtrend coming up, or the trend coming up on this side and the trend coming back down on that side. So not good to be involved in that. And a lot of people were holding up here thinking it was going to recover, but it ended up not recovering at all, and it just kept falling lower. So I need to put another line on my chart here. This is actually support right here that we had formerly, and now that will be resistance. So let's just go through the chart real quick. $55 and around 70 cents is where we're going to want to see this thing break through and close to eventually move on to all new highs. I think it'll be a while before that happens, but you could see there was no support going up, so you really didn't have any support levels. You had a little bit of support right here on the way up. So on the way down, you should know, when you're looking at the charts, when you don't see any support and this goes straight up like this, it's eventually going to come back down. And when it does come down, you're not going to have any support coming down to hold this price up. So it's just going to it's going to drop as fast as it came up. So you saw that happen here. It dropped as fast as it came up. No support held up right here. And eventually you hit a support which was right here. As you could see on the other side of it right here, that was formerly support, and you hit the support level. It had a little bit of a bounce near the 200-day moving average on the daily chart, and it recovered back up to $27.06. And I think that's when a lot of people who were holding from up here, they cut their losses, and it caused the stock to fall even further after that. And it ended up below this support line, which was around $19 right here. And it traded sideways for a little bit. It started to recover back up. But you could see this trend line came into play here, and that's when this downtrend started. It's been under this downtrend for a while now, especially during this correction that happened in February, right around this area. This is when the correction started in the NASDAQ, and it did not help any SPACs or any former SPAC companies during that time. So you could see it got stuck below this red line, our downtrend line. Whoops, I didn't mean to move that there. It was stuck during the whole correction, and you know, it eventually fell all the way down past our $12 and what's this, $12.70 support. We had a little bit of support there. It fell below that. And, you know, like I said, the bottom was supposed to be $10 because any SPAC company has a bottom of $10. But this is not a SPAC anymore. They went public through a SPAC, so the merger already happened. So anyone that thought $10 would have been the bottom, you know, you were wrong, because this is not a SPAC anymore. So it fell below there, and people, you know, that causes people to even sell more, you know, that were buying in around this area, and then the correction happened. It just wasn't a good combination of events here that happened to this company. You know, there was nothing wrong with the company during this time. No bad news was coming out. It was just the way the markets were working at this time, and the markets are still working like this also, because you could see it bounced off finally off this $8 line right here, our bottom support, and it looks like we found a bottom there because it's made a little bit of a recovery. But as you could see, it's going back down right now as we speak. It came all the way back up to around $11, and that's going to be our resistance point right here. So I'm just going to throw a line in there. We're going to need to see this get above $11 moving forward to make another uptrend. So I'm going to switch over to the 4-hour chart here and see what we're looking at. As you can see, you know, we don't really have much support and resistance at this point with our moving averages. It looks like our 21-day moving average is acting as resistance right now. You know, you saw it get above this 50-day moving average on the 4-hour chart for a couple days in here. That was acting as support, but eventually these past couple days, it's fallen below that 50-day moving average, and we have been moving down ever since. So you could see our trend line here was following our 50-day moving average, and this day right here, it hit that and sold off as soon as it got to that 50-day moving average. So that's going to be big resistance going forward also. We're going to need to see this thing get above that 50-day moving average, but first we need to see this get above the 21-day moving average also before we could look at this 200-day moving average on the 4-hour chart. I'm going to switch over to the 1-hour chart now and see what we could see there. And it looks about the same, you know, 200-day moving average is acting as resistance, and also our 50-day moving average. So switching back over to the daily chart, you know, it looks like it's getting near our bottom again. It's trading at $9.21 right now at this moment. And, you know, you could see our bottom, which was $8. So it looks like it's back on a downtrend, and it might come retest that bottom again before we could possibly jump off that bottom and move on to all new highs. Or not all new highs, but, you know, move higher in the stock price. So that's the way I would trade it. I would probably wait right now because there is a lot of volatility in the market, and see what it's going to do in the next couple days. See if the sell-off continues and if this thing will drop even farther. Otherwise, I would wait for a more defined reversal in the markets. You know, if this correction is coming, you're not going to want to be buying right in here, because you still have a lot of more downside to go, and it could also drop lower. You never know. For the people who bought in here, you know, who've been buying this up, they could be selling on the way down, and it could cause the price to go even lower. You know, you wouldn't think, because it's a SPAC, that it could drop lower than $10, or it was a SPAC. It's not anymore. But, you know, people who have been buying below this $10 mark can always be selling and cause the price to drop even farther. So there's no telling, you know, how much farther this could go down or how much farther it could go up. So like I said, I would wait for a clear reversal in the market, or a clear reversal on your chart for this stock to be buying in around this area, because this is a kind of a dangerous area to be buying. We've seen it drop lower. Although, you know, there's not much a lower side downside risk on this one on the chart yet, but you never know, because it could always drop below this support. We've only touched that once, and usually we wait to see a double bottom, maybe hit this $8 mark again before a clear reversal, or even a triple bottom. You know, you see that all the time too, where it'll come up and then it'll drop back down and hit this again. So you might have to wait 2 more times for it to drop to this $8 level before there's a clear reversal. And with the way the markets are looking right now, it's a lot of volatility. Nobody really knows what's going on. We've had this correction going on in the NASDAQ for a couple months now. So, I would wait for that to be definitely over and we get on a nice bull run to start making trades in this one for the long term. If you want to play it short term, you could always play the day and see how the day goes, wait for a morning dip and buy options and maybe sell them, once there's a, once it goes back up a little bit for the day. But right now for the long term, I don't know about buying right here. I would probably wait till it gets closer to this $8 mark and make sure that we see another bounce off this $8 support to confirm that that is strong support at $8. So like I said, just watch your moving averages on your charts, and we'll want to see this thing go above this 21-day moving average to start, and then we'll be looking towards that 50-day moving average. And eventually it will recover, and we'll probably be looking up here at this 200-day moving average going forward. But right now, the markets are uncertain and nobody knows really what's going on. There's a lot of selling pressure happening. So be careful out there in your trading and your investing. And that's my video. If you guys liked it, go ahead, hit that like button. Don't forget to subscribe to the channel and make sure you hit that notification button so you don't miss out on any new videos. And we will see you next time on Chart Stoppers.